Welcome to another video in the SAP S/4HANA Fixed Assets playlist. In the video today, I will continue demonstrating on SAP S/4HANA 2021 the different business cases for fixed asset retirement. I have already explained all the business cases and the accounting entries in the process video. I will leave you a link here and you have to watch it before you continue watching the demo as usual. In the video today, I will demonstrate the process of partial and full fixed asset retirement with revenue. This will include an asset that is fully depreciated and another asset that is not fully depreciated. So I will start by creating the fixed asset, posting fixed asset acquisition, depreciation, and then we will post the retirement with revenue. And we'll have a look on the accounting entries and how all of this will impact our fixed asset values. Today I will demonstrate the process only on the finance side without integration with sales orders, but then I will create another video demonstrating the fixed asset sale with sales orders. So I will start with the first business case, a fully depreciated asset that will be retired against revenue. So here on the left side, let's go to AS01 to create our asset master data. Asset class 2000, company code AG20. Again, the same steps we do in every video. So here we will say asset sale, fully depreciated. And then in time dependent, the cost center is 1000. And in the depreciation areas, I will use a useful life of 6 months. So this way I can fully depreciate the asset in this year. And we can see how we can retire it. So now we have a useful life of 6 months and save. Here on the right side, I will go to AS03 to display the asset values. Here is our asset number. And go to asset values. And the asset has no values so far. Now let's go to the left side and go to fixed asset acquisition, F-90. And here we have the document date 01/01/2023. The posting date is also 01/01/2023. And then our vendor is AG01. And then our amount, let's say 6,000 for 6 months. And then on the other side, we have a debit to the supplier, to the asset. And the account is our asset number. And the transaction type is 100. And the amount is the same. Tax code is V0. Post. Now if we refresh here, we can see the fixed asset acquisition. So here we have our fixed asset acquisition for 6,000. And if we go to posted values, we can see the planned depreciation over 6 months. So the asset will be fully depreciated by June. Now I will run the fixed asset depreciation, so transaction AFAB. And here we have the company code. The posting period is 6. And detailed log test run, remove it and execute in the background. Okay. Immediate. Save. And here, let's refresh. Now if we go to posted values, the depreciation is posted and the asset is fully depreciated. The net book value is 0. We have acquisition value 6,000, ordinary depreciation 6,000 negative, so the balance is 0. Now let's post the retirement with revenue. So now let's go back to post retirement with revenue. Go to accounting, financial accounting, fixed assets, posting, retirement, and here we have retirement with revenue. We have here with customer or without customer. So without customer, if we want to post against a clearing account and then in another transaction, we post the customer entry against this clearing account, or with customer, here we post everything in the same transaction. I will show you both of them, but this means we have to do another business case, but it's okay. So now let's go here to first with customer, and I will post the asset retirement with revenue or the asset sale as of 01/07/2023. By then the asset will be fully depreciated. And the same for the posting date, 01/07/2023. And in the first line of the entry, we have a debit to the customer. So here we insert the customer number. And I am using customer 67. And let's say the amount is 500 USD. So now we are selling an asset that had the value of 6,000 USD, but it is fully depreciated. So normally the business case would be that we are selling it as scrap. And we agreed with someone that he is going to buy it for 500 USD. So this is the price we are going to receive for the asset sale. Okay. And on the other side of the accounting entry, I will insert credit GL account 50. And here I will insert the clearing intermediary account I told you about that we have to use in SAP. Let me insert the account here, and then I will explain to you everything after we post the transaction when we see the full accounting entries. So here, this is the account I'm going to use, and the amount will also be the same, 500. Here I will click on asset retirement, then enter, and SAP will show this screen where I will choose the asset I want to retire. So here I will insert our asset number, this one. And here we have the transaction type, and we have the asset value date. So the asset value date is the date as of which I want to do the asset sale, which is 01/07/2023. And then here we have this place where we insert the amount we want to sell from the asset. So we use this for partial asset sale. In case we want to partially sell the asset, we will insert the amount or the percentage we want to sell here. But if we want to sell all the asset and completely retire it, then we click on complete retirement. So we either choose this or we insert a value here. If you don't do any of this and then you try to hit enter, SAP will show you an error. This is completely normal because we did not say whether we want to have a complete retirement or a partial retirement. So I will click on OK and then click on complete retirement because this case is full retirement of the asset, and then click on OK and then post. Now the accounting entry is posted. Let's go to the Asset Explorer, refresh. Now we have a retirement posted for current year acquisition with revenue with the transaction type 260, and let's display the financial entries. So double click here. When you do this, SAP will show you only one entry, which is this one. But actually, when we did the transaction, SAP posted multiple entries. To see all of them, go to Environment, Document Environment, Accounting Documents, and here we can see what SAP did. So here we have one accounting document posted to 0L, only to the accounting principle of 0L. I think this one is IFRS. And we have one accounting document posted to 2L, so this one is the GAAP. And then we have one that's posted to both of them. And we have the asset transaction, which is not a financial entry. So now we have 3 accounting entries. Now let's display first the one that is common between both of them. So double click here. Here we have a debit to the accounting, the accounts receivable to the customer account for 500, and a credit to the GL account we inserted, the clearing asset disposal for 500. So this is the first entry. Let me show you all the entries next to each other. It will help to understand the overall view. So again, I will go to FB03 to display another accounting entry. And here we have the same one, so go here. So this is the same accounting entry, but I will go to account, to environment, document, environment, accounting documents. And let's open here the 0L accounting document. So this is the second accounting entry we have. And by the way, the entry posted to 0L and also to 2L are both the same in my case because I have the same values in the depreciation area for the useful life and so on, so there is no difference. But SAP anyway posts one accounting document for every accounting principle. So the other one that's for 2L is also the same accounting entry exactly, but only posted to 2L. So now if we look to these two, this is the overall view of the accounting entries posted. So first we have in the first entry, we have a debit to the accounts receivable customer account for 500, which is the amount we are going to receive from the customer. And we have a credit to this account, clearing asset disposal for 500, which we inserted manually in the transaction. And then in the other entry that was created automatically by SAP, we have first the write-off of the asset. So we have a credit to the asset reconciliation account for 6,000 and a debit to the accumulated depreciation for 6,000 to write off the asset. I already explained the accounting entries in detail in the process video. If you have not seen it, then you must watch it before you continue the demo. I will leave you a link here. You can also watch it before you continue with this one. So this is exactly what I explained in the process video. Here we have the write-off of the asset, and then we have gain for asset transaction because the asset was fully depreciated and we sold it for 500. So we gained 500. So we have gain asset transaction, and we have again the clearing asset disposal account used here. This is the same account I used here. So the account that is used here is actually, we inserted it manually in the transaction, if you remember. But the other one here is determined automatically by SAP. But in my business case today, I used the same account that is in the configuration, also in my manual transaction. It can be different in your case. You can have 2 different clearing accounts, but anyway, they should net each other. So here we have a credit, and here we have a debit. So this clearing account has a balance of 0 now. So this is our first business case of asset sale, full asset sale for a fully retired asset. Now let's go to the left side, go back. The other example we have for the same case is to use this transaction, ABAWN. And if we use this one, we will not insert a customer. We will just insert the asset we want to retire. So let's go here. So we'll just insert the asset we want to retire, the dates, and then we post. So SAP will retire the asset against the intermediary clearing account, but it will not post the other entry for the customer. Then this entry for the customer will be posted somewhere else when we actually send the invoice to the customer, for example. So this is the second case we can use to do the same business process. Now let's go back and go to our second business case. The second business case is asset retirement with sale for an asset that is not fully depreciated. So let's go back and create our second asset. So /n AS01, 2000 AG20. Here we have the description is asset sale fully partially depreciated this time. And go to the time dependent data. Cost center is 1000. And then go to depreciation areas. So this asset will be for a useful life of 4 years. And then I will retire it after 6 months only. So this way it is not fully depreciated and we can see the accounting impact. Save. Now on the right side, let's go back to our Asset Explorer. /n AS03. So here is our asset. And the asset has no value so far because we just created it. Okay. Now let's post the fixed asset acquisition, F-90. Quickly. So the acquisition is 01/01/2023. Posting date 01/01/2023. Then we have our supplier is AG01. And let's say the value is 40,000. So this asset has an acquisition value of 40,000. The other line is a debit to the asset. And our asset is this one. And transaction type is 100. The amount is the same. And tax code is V0. Post. Refresh the Asset Explorer. We can see the acquisition value here. Second step is to post the fixed asset depreciation. But first, so here we have our acquisition value. If we go to posted values, we can see the planned depreciation of 833 per period over a year. So for every year we have 10,000 depreciation. Now I will post the depreciation until period 6. So /n AFAB. We have the company code. Posting period is 6. And detailed log. Remove the test run. Program execute in background. We are again repeating the same step for the 90th time, but it's okay. 90th. Anyway, so okay. And immediate. Save. Here, refresh. We can see the depreciation posted until period 6 for 5,000 USD. Come on. So here, if we go to posted values, here we have the depreciation posted. Now let's retire this asset. So I'm going to use the same transaction. So go back, asset retirement with revenue with customer. Or maybe this time I can show you the transaction without a customer. So let me show you this one, asset sale without customer. For this case, so here is our asset. And then we have here the ledger selection. If I want to retire only one accounting principal, but I want to retire both of them, the retirement will be as of 01/07/2023. Posting date 01/07/2023. The same for asset value date 01/07/2023. And the revenue that I want to receive for the asset. So this asset has a net book value now of 35,000 and we are selling it. We can either sell it with a loss or we can sell it with a gain. So if we sell it for more than 35,000, then we are gaining some money. If we sell it for less than 35,000, then we are losing some money. So now I will sell it for only 30,000. So this way we are selling it with a loss, and then save. We have two accounting entries, one accounting entry posted for each accounting principle, the same as the last case, but this time we don't have the entry for the customer. And then after this, someone should post the clearing account against customer or cash or bank or whatever account you want to use. So anyway, I will click on OK, and then let's refresh here to see the accounting entries. And here we have the retirement posted 40,000 for 200 with transaction type 260. So double click on the line. And this is the first accounting entry. If we want to see all the accounting entries, again, go to environment, document environment, accounting documents. And we can see that this time we only have two accounting entries, one for 0L, one for 2L, and they are both the same since the values for this asset are the same for both accounting principles. And we don't have the entry for the customer. So here we have these two accounting entries. Now let's go back to the entry. And this is similar to what we did when we posted the asset sale for asset that's fully depreciated. It is almost similar. So here we have the machine and the equipment. The reconciliation account for the asset is credited for 40,000, the full value. And we have a debit to the accumulated depreciation for 5,000. So this is the full value of the accumulated depreciation posted as of the day of the sale. So this means that the asset is written off, and we will no longer have it in our balance sheet. And then we have the loss of 5,000, which is the difference between the net book value and the revenue we received from the sale. And we have the difference posted to the clearing asset disposal, the same account that was determined in the other accounting entry also. I have updated the configuration manual for elite members to explain how to determine this account automatically in SAP. So if you want to see the configuration steps, you can check the configuration manual. So here, this is the accounting entry. It is very similar to what I explained in the process video. So now let's move to the third business case, which is posting partial retirement for one of these cases. So let's take the same case like this one. I will create another asset quickly, /n AS01. So this asset I will partially sell. It will be the same case as this one, but we will do it partially. So here it will be asset partial sale, partially depreciated, time dependent 1,000. I can actually copy the asset directly, but I mean, I feel it's easier to just do it like this. So here we have the useful life 4 years, and we are good. Save. Now let's go to the Asset Explorer /n AS03. And this is our new asset. It has no values. Now let's post the acquisition /n F-90 and document date 01/01/2023. So this is another acquisition for a new asset, 01/01/2023. And we have a debit, we have a credit to our supplier, AG01. And this one will also be 40,000, exactly the same case. And then the other line is 70 debit to an asset. And there is our S number. And the transaction type is 100 for external acquisition. And here the amount is the same. Tax code is V0. And post, refresh here, and we will be able to see the fixed asset acquisition. Now let's post the depreciation /n AFAB. So exactly the same case as the one we just did. Posting period 6, detailed log, test run, program, execute. Sorry, we have to execute in the background. Okay, immediate, save, refresh. I know this is getting boring to everyone, but I hope you appreciate that I'm doing the business case end to end, because many people ask for this. So now if we go to posted values, we can see the depreciation posted until period 6. Now let's run again a partial asset sale this time, using also the same transaction, asset sale without customer, ABAWN. So this is our new asset. We have manual revenue. So now let's say the asset, we are going to retire 20% from the asset, and the asset now has a net book value of 35,000. So let's say I'm going to sell 20% of the asset for 20,000. This is again for sure. So let's put here, Ctrl C, up. So let's say the manual revenue is 20,000. And the document date 01/07. Also the asset value date 0107, the posting date is also 0107. And then go to partial retirement. If I post like this, SAP will fully retire the asset. I want to only do a partial retirement, so go here and choose the amount you want to retire from the fixed asset acquisition value. So I can either insert the amount or I can insert a percentage. And I want to retire 20%. And here from current year acquisition. And save. We have 2 accounting entries posted. Now let's refresh. 1 for each accounting principle. Here we have the transaction here. So we retired 8,000 of the asset. To see all the accounting entries, go to environment, document environment, accounting documents. We can see 2 accounting entries, one for 0L, one for 2L. And again, they both have the same values because the asset has exactly the same values in all the accounting principles. So let's display the first one. And it is the same accounting entry. So we have a credit to the asset reconciliation account for 8,000, which is 20% of the acquisition, the full acquisition value, 40,000. So the result is 8,000. And then we have accumulated depreciation debit for 1,000 because the accumulated depreciation has a balance of 5,000. And if we multiply 5,000 by 20%, we get to 1,000. And then here we have the clearing asset disposal. So this is the amount we received for the sale. And here we have 20,000. And the difference is a gain from asset transactions. So gain asset transaction for 13,000. These 2 accounts, all of these accounts actually are determined automatically based on the configuration we have for the asset class and the account determination. All the steps are explained in the configuration manual in the Elite Documents library. So here this is the accounting entry, and I hope this is clear. So now we understand how to post fixed asset sale for an asset that is fully depreciated or an asset that is not fully depreciated, and how to post a full sale or a partial sale, and the accounting entries included. If you have any questions on the process, don't hesitate to leave me a comment. You can always send me also a message on LinkedIn and let me know if you want me to explain anything else in this process. Thank you for watching, and I'll see you again soon.